Welcome back to Investing Talk Podcast.
Today, we're looking at critical metals.
As usual, before we start, subscribe, like, and comment to this video to support the show.
Yeah.
Today, we are going through a pretty massive stack of financial filings and geological data to...
A very massive stack.
Yeah, exactly. To really figure out if this company is, a genuine solution to the critical supply chain crisis the West is facing, or if it's just another highly speculative mining play looking for retail capital.
Right. And we have a truly fascinating situation on our hands today. We are looking at a pre-revenue mining exploration company that just happens to be sitting dead center of a massive geopolitical tug-of-war. I actually want to ask you right out of the gate, have you ever considered what happens to Western tech and defense capabilities if China cuts off rare earth elements?
I imagine it's not a pretty picture at all.
It's an absolute nightmare scenario. It is a scenario that keeps defense contractors and Pentagon officials awake at night. Right now, China operates essentially like the OPEC of rare earths.
Right.
They control the vast majority of the processing and refining capacity globally. If they decide to turn off the tap, the manufacturing of everything from, smartphones to F-35 fighter jets just grinds to a halt.
Wow.
But today, we are talking about the Tanbreeze project up in Greenland. This project is positioning itself as the potential Western supply chain breaker, and it completely changes the conversation around critical minerals.
Okay, let's unpack the fundamentals and see what's actually under the hood. Because when
Right.
you look at the raw financial reality of this operation, you have to acknowledge exactly what stage of the game we're in.
Definitely.
For anyone looking at the balance sheet today, this is a development stage company. That means there is absolutely no revenue coming in right now. Profit margins, completely non-applicable because there are no active revenue-generating operations yet.
Right, it's all outgoing.
Exactly. The free cash flow is solidly negative. They are burning through capital with heavy exploration spending, and we just saw them file a $25.17 million shelf registration in February of 2026. So for a skeptic looking purely at traditional financial metrics, that lack of cash flow and the reliance on equity raises stands out immediately as a massive hurdle.
It is a hurdle if you look at it through the lens of a traditional mature value stock. Absolutely. But you really have to view this through the lens of an exploration stage growth asset. What they have done post their 2024 IPO is maintain an incredibly lean corporate structure.
Okay.
And let's demystify that $25.17 million shelf registration.
Yeah.
Because it sounds really scary to a lot of retail investors.
It does. It sounds like massive dilution is coming tomorrow.
Exactly. But a shelf registration is essentially a company getting pre-approval from regulators to issue new stock in the future, if and when they need it. It is like setting up a massive line of credit. It isn't a sign of immediate financial distress. It is actually a strategic move to provide necessary financial flexibility.
So they aren't necessarily dumping all those shares on the open market tomorrow morning.
Not at all. They need that runway for the complex permitting processes and to negotiate offtake agreements from a position of real strength. And just to clarify for everyone listening, an offtake agreement is basically a massive pre-order.
Right.
It's when a major tech or defense manufacturer signs a contract to buy the minerals before they are even pulled out of the earth. You cannot negotiate a good pre-order if the buyer thinks you're about to run out of money.
That makes sense.
And more importantly, the cash they do have isn't just disappearing into administrative overhead or fancy corporate offices somewhere. It is being aggressively reinvested straight into the ground. They are funding high-grade drilling at the Tanbreeze Hill deposit, and the results have been massive, hitting up to 0.94% TREO.
Let me stop you there, because 0.94% TREO sounds like a tiny number to someone outside the mining industry. What does that actually mean?
TREO stands for Total Rare Earth Oxide. It is the grading system used to determine how much valuable material is actually in the rock they are digging up. In the world of rare earth mining, hitting nearly 1% TREO across broad sections of a deposit is incredibly significant. It proves the ore is rich enough to be economically viable to actually mine.
And we really need to highlight what exactly they are finding in that ore, because the competitive moat here is what makes the fundamental story so compelling to me. I know they are sitting on some heavily restricted minerals. What exactly did they find in the ground there?
This is where it gets really exciting. The Tanbreeze project isn't just another hole in the ground. This Greenland site is essentially a geological unicorn. It boasts a staggering 27% heavy rare earth elements concentration within that overall TEO grade.
27%.
Yeah. We are talking about critical, heavily restricted minerals that the modern world desperately needs. They are sitting on deposits containing dysprosium at 62%, terbium at 45%, and yttrium at 45%. Plus, they have zirconium, niobium, and tantalum in the mix.
Okay, so a bunch of elements that are incredibly hard to pronounce. Why should the average investor listening care about dysprosium and terbium?
Because they are the invisible backbone of the modern world.
Mhm.
Dysprosium is used to make magnets that don't lose their magnetism at extreme temperatures. So if you are building an electric vehicle motor that gets incredibly hot, or, say, a guided missile system, you absolutely need dysprosium.
Right.
Terbium is crucial for solid-state electronics and advanced sonar systems. Without these specific heavy rare earths, advanced defense systems and high-end technology simply cannot function. Currently, the competitors dominating this space are heavily centralized in China. Even other Western alternatives like MP materials and energy fuels face complex logistical realities. But critical metals has a distinct logistical and geopolitical moat.
Let's talk about that logistics piece. Because having the minerals in the ground is one thing, getting them out and into a manufacturing plant is another entirely. Being located in Greenland places them firmly outside of China's sphere of influence. But the actual physical location of the mine is fascinating to me. They are sitting right on an ice-free fjord.
Which is an absolute game changer. In the mining world, transportation is half the battle. You can have the richest mine on Earth, but if it is landlocked hundreds of miles from a port, your profit margins get eaten alive by trucking and rail costs.
Right, so having an ice-free fjord is basically like having an Amazon fulfillment center right in your backyard.
That is the perfect analogy. Having an ice-free fjord means they have year-round direct shipping access to North America and Europe. You can pull massive Panamax cargo ships right up to the operation. There are no geopolitical choke points to navigate, no international borders to truck ore across.
That's huge.
On top of that, the project is designed around a simple, open-pit mining concept that utilizes low-cost, green hydropower. You mine it cheaply using green energy, load it straight onto a ship, and send it directly to Western markets. It is a vertically secure supply chain dream.
We've talked a lot about this geological unicorn, but geology doesn't always equal profit. Pivot to the charts to see how this story is trading, because all of that fundamental potential we just discussed is finally starting to translate into actual market action. We recently saw a very sharp 15% stock pop.
Yes, we did. And what's fascinating here is that this breakout wasn't just random market noise or meme stock behavior. It was directly triggered by those record Tanbreeze rare earth element assays we mentioned earlier, hitting that 0.94% TREO mark.
Okay.
When you combine that undeniable geological validation with the strategic shelf filing, the market interpreted it as a massive signal of momentum. It showed investors that the geological upside at the Hill deposit is real, and the company now has the financial maneuvering room to keep exploring it aggressively.
That momentum is crucial right now. We are seeing the stock build higher highs as they head into the incredibly important 2026 field season. Now, it is worth noting the increased volatility in the broader sector. We are seeing massive geopolitical tailwinds pushing rare earth stocks higher across the board.
Absolutely.
The whole sector gets incredibly reactive to global news. When there are rumblings of trade wars or supply chain disruptions, this stock catches that same volatile updraft as investors scramble for secure commodity plays.
Shifting over to market sentiment, how is the street perceiving this momentum? Well, right now, the mood is overwhelmingly bullish. The validation of this resource is undeniable. They recently reported 33 separate intercepts at the Hill Zone.
And just to translate that, intercepts means they drilled down and hit the valuable ore 33 different times in different spots.
Exactly. It is a massive vote of confidence for the sheer scale and continuity of the deposit. It proves it wasn't just one lucky drill hole. And they are not doing this alone. You have aligned institutional backing, specifically from European Lithium, which holds a major 37.5% stake in the company.
I want to pause on that because European Lithium isn't just a random backer. They are a major player in the critical minerals space. Having them hold a nearly 40% stake is like having a Michelin star chef invest heavily in your new restaurant.
Great way to put it.
It signals to the rest of the market and to retail investors that the recipe is fundamentally good. That kind of heavy-hitting institutional presence tells you that the smart money has looked at the core data and sees the long-term viability of the project.
It acts as a huge psychological safety net, absolutely. But we also have to look at the massive macro forces at play here, which dwarfs even institutional backing. The United States government recently pledged $8.5 billion specifically to counter China's control over the rare earth supply chain.
8.5 billion is massive.
It's a colossal amount of capital looking for a home, and it fundamentally changes the landscape for companies in this space. Critical metals is increasingly being grouped right alongside established multi-billion-dollar peers like MP Materials and Energy Fuels as a legitimate Western alternative. The aerospace and defense sectors are actively looking for supply chain diversification right now, and this company is sitting right in the crosshairs of that surging demand.
And that macro environment creates a breeding ground for some very interesting speculative catalysts, doesn't it?
It really does. We know the 2026 infill drilling campaign is a major priority. And for clarity, infill drilling is when you drill holes closer together to upgrade the certainty of the resource, proving that the ore body is a continuous solid block rather than just scattered pockets. But beyond the drilling, there are rumors and macro ripples that could accelerate this timeline significantly. For instance, the market is closely watching for those potential offtake deals we discussed. Securing a binding offtake agreement with a major defense or tech manufacturer would drastically de-risk the project overnight.
Because it guarantees a customer before the mine is even fully built.
Exactly. We also have their fiscal year-end approaching on June 30th, which could bring further highly anticipated updates on permitting progress with the Greenland government. And frankly, any geopolitical escalation like the recent strikes we saw in the Middle East tends to spill over immediately into the critical minerals sector. When global tensions rise and the threat of supply chain disruption increases, the premium on defense-critical rare earth peers skyrockets.
Okay, let's flip the script and dig into the bear case. What are the red flags here? Because it is not all smooth sailing, and the market environment for commodities is famously unforgiving. The first major threat is simply commodity and geopolitical volatility. We recently saw a Supreme Court tariff ruling that pressured the entire sector lower.
Yeah, that was a tough week for the sector.
It's a stark reminder that policy decisions, global trade wars, and tariff structures can create wild price swings for rare earth elements, regardless of how good the geology is in Greenland.
That volatility is a very real factor. When China dominates the current supply, any shifts in their export policies, or even rumors of them flooding the market to suppress prices, can send shockwaves through the pricing models of every mining company on Earth.
Exactly. But there are also internal risks we need to address, and you can't gloss over this. There is a key neutral to bearish signal that cannot be ignored. There has been notable insider selling during the stock's recent 15% pop. When you see insiders, the people who know the company best, taking ships off the table during a breakout, it naturally raises questions for retail investors. You have to combine that insider action with the reality of the shelf filing we discussed earlier. That $25.17 million filing equates to roughly 2.77 million shares. That presents a very real dilution overhang for current investors.
Explain that dilution overhang for a second for anyone new to that term.
It is like having a pizza cut into 8 slices. If the company issues more shares to raise that $25 million, they are essentially cutting that same pizza into 12 slices. The pizza didn't get any bigger, but everyone's slice just got smaller. If they tap into that shelf to fund operations, the value and voting power of existing shares gets diluted. How is that a good thing for an investor getting in today?
Those are incredibly valid concerns, but you really have to view them in the context of the mining life cycle. From a growth perspective, these risks are highly typical and, frankly, already priced in for a company at the exploration stage norm. Let's tackle the insider selling first. Insider selling can happen for a dozen different personal financial reasons. Tax obligations, buying a house, portfolio diversification. It doesn't inherently mean a lack of faith in the asset, especially when there isn't a massive, coordinated cluster of insiders all rushing for the exits at the exact same time.
Okay, fair enough. And the dilution?
As for the dilution, that cash flexibility is the exact fuel needed to fund the upside catalysts. You can't drill and prove a massive resource without significant capital. You have to buy the fuel to keep the drill rig spinning. Yes, your slice of the pizza might get slightly smaller in the short term, but the goal of that capital is to build a massive, profitable mine that makes the entire pizza exponentially larger in the long run. Furthermore, this raises an important point about what they are actually mining. Their specific focus on heavy rare earths, as opposed to the much more common light rare earths, actually insulates the company from a lot of the standard commodity volatility.
How so?
Because the demand for heavy rare earths, like dysprosium and terbium, is highly inelastic due to high defense offtake potential. That means that even if prices fluctuate, defense contractors still must buy these materials to build their technology. There is no substitute. That inelastic demand means they are somewhat shielded from the regular boom and bust market cycles that affect typical commodities like copper or iron ore.
Bringing it all together, let's look at the final verdict. Based on the fundamentals, the market action, and weighing the risks against the geopolitical tailwinds, where does this land?
Based on everything we've analyzed today, the official bullish score for this asset sits at an 8 out of 10. To give you the elevator pitch recap, Critical Metals owns a top-tier heavy, rare earth deposit with validated, highly economic 0.94% TREO grades. They are sitting on a geological unicorn in Greenland, perfectly positioned to break a global supply monopoly at the exact moment the West is pledging billions of dollars to secure defense needs. But you have to frame this correctly as an investor. This is strictly a multi-year hold. You're investing into the Tambree's production milestones over the coming years, trusting the geographical moat and the massive macro tailwinds to carry the project to fruition.
It really is a fascinating setup, and it leaves you with a very provocative thought to ponder as we wrap up. We spend so much time analyzing traditional financial metrics on the show, looking at negative free cash flow, worrying about dilution overhangs, tracking insider sales and shelf registrations. But you have to wonder how completely irrelevant those traditional financial metrics might become when a mining asset is designated as a matter of absolute national security by Western governments. If the geopolitical situation continues to fracture and the U.S. government decides they absolutely must have the dysprosium sitting under that Greenland fjord, does the defense premium permanently change how we value these types of pre-revenue assets? It is entirely possible that strategic necessity will eventually outweigh every single standard balance sheet concern we've discussed today. Definitely something to think about as the sector continues to heat up. As usual, before we wrap up, subscribe, like, and comment to this video to support the show. We will catch you next time.